All right, let's dive into something that's got a ton of buzz, but also a lot of confusion: Bitcoin trading. Today, we're going to demystify the basic strategies and just help you get a handle on what it's all about. Okay, let's get into it. So, if you're here, you've probably seen the headlines, heard the hype, and maybe felt, well, a little lost. It's this whole world of jargon and crazy looking charts, and it's really easy to feel like it's just too complicated to even begin. But don't worry, that's exactly why we're doing this. We're going to cut right through all that noise and give you a super simple, clear framework to get the absolute basics down without all the confusing terms. Here's how we're going to break it down. We'll start with the very first steps. Then we'll get to what is probably the most important question you can ask yourself. Are you an investor or a trader? From there, we'll look at what each of those paths actually means, the long game versus being an active trader, and we'll wrap it all up with a simple toolkit so you know exactly what to take away from all this. Okay, section 1, the first steps. Before you even think about buying or selling anything, there is one big decision you've got to make first, and it really sets the stage for everything else. And this is it. Seriously, the most important choice you'll make right at the start isn't what coin to buy or when to buy it. It's how you're even going to approach this whole thing. That choice defines your entire journey. Which brings us right to the heart of it all. Are you an investor or are you a trader? And trust me, these are two very, very different ways of thinking. To figure this out, you really have to ask yourself, what am I trying to do here? Am I looking at this as a long-term thing, something I believe in for the future, or am I more interested in making profits from the day-to-day price changes? And this chart, this just lays it all out perfectly. You can really see how different these two mindsets are. Investing, that's a long-term play. We're talking years. It's kind of a set it and forget it vibe, where the goal is just slow, steady growth over time. But trading, that's a whole different world. The timeline is days, maybe weeks. It's super active, totally hands-on, and the goal is to snatch up smaller but more frequent profits. So let's explore that first path. Strategy number 1. Playing the long game. This is the investor's way. Now, if you hang around crypto spaces at all, you are going to see this word HODL. It actually started as a funny typo in a forum years ago, and it just stuck. It means hold on for dear life. And it's become this whole philosophy of just buying Bitcoin and holding it through all the crazy ups and downs because you believe in its value way down the road. And the steps for HODLing? They look pretty simple. Step 1, you buy the asset. Step 2, you move it into a secure personal wallet. Think of it like your own digital vault. Then comes the really hard part. Step 3, you just hold on. And I mean, you ignore all the noise, the panic, the hype. And finally, you don't even think about reevaluating for years, not days or weeks. So who's this for? Well, it's perfect for people who truly believe in the tech for the long haul. It's also great for folks who would get super stressed out by watching prices bounce around every day. And honestly, it's for anyone who just doesn't have the time to be glued to a computer screen watching charts all day. Okay, now let's flip the coin and look at the total opposite approach. Strategy number 2, the active trader. We're going from set it and forget it to completely hands-on. Active trading is all about embracing that chaos, that volatility. Instead of ignoring all the short-term price swings, traders actually try to use them to make a profit. It's all about frequent buying and selling to try and ride the market's waves. The process here is way more involved. You're starting by analyzing charts to find patterns. Then you're identifying exact prices where you want to buy in and get out. Then you actually execute those trades. And maybe most important of all, you are constantly and actively managing your risk. This path, as you can probably guess, is for a totally different type of person. It's for someone who actually enjoys digging into market analysis. It's for people who are ready to put in some serious time. And, this is the big one, it's for individuals who have a much higher tolerance for risk and the stress that comes with it. So, we've walked through the two main approaches. Now let's put it all together into our final trading toolkit, a nice little summary of everything. This really boils it all down. For the patient believer who's playing the long game, the big risk isn't a bad day or a bad week. It's the chance the whole market goes down over the long term. But for the hands-on analyst, the risk is the exact opposite. It's getting burned by a sudden price swing right now. The key thing to see here is that neither one is risk-free. The kind of risk you're taking on is just different. And that leads us to the one rule that matters for absolutely everyone, no matter which path you think sounds better. Risk management is everything. Now, obviously, this is not financial advice. The whole point here is to just help you understand the landscape. But the most important part of that landscape is knowing that you should only ever risk what you're genuinely okay with losing. So we'll leave you with this last question to think about. Now that you see the difference between being a patient investor and an active trader, which one feels more like you? Which approach fits your personality, your goals, and just your general temperament? Answering that for yourself, that's the real first step. Thanks for tuning in.